Let's get in a perspective on Indian markets then. Sandeep Wagle, who is the founder and MD of Aptar Technical Advisory Services, now joins us on the phone line. Good morning, Sandeep. Good to have you with us on Morning Mantra. To start with, what is the raise that you are mapping on Nifty as it's the start of a brand new month?
Good morning. I would talk of a bottom of 5200 and I would talk of a resistance at around 5380, 5400, and I would rather give this view for this whole week, which is a truncated week. So 52 to 54 broadly remains the range.
Okay, so it's a 200-point range, Sandeep, that you're talking about. But if we talk about the Bank Nifty specifically, earlier on in the show we were talking to, Mr. Vijay Bhamvani as well, and he said if we continue to trade above that 10,150 mark for the Bank Nifty, he sees it heading towards 10,400 as well, possibly. Would that be some, would that be a line of thought that you would also concur with?
Absolutely. In fact, I don't even think it will go down to 10,150. I think 10,200, 10,180 will be a very strong support area. In case I am advising clients who are long, my stop loss would be 10,180 or a little below that. And 10,400, 10,450 is what I absolutely concur with.
All right, and Sandeep, talking about the sectoral performance, we saw oil and gas witnessing a very good run-up in trade on Friday, up by about close to 3%. But what is the kind of movement that you're expecting in today's session for oil and gas? ONGC or a Reliance both have witnessed a very, very strong bounce back from the lower levels, which were extreme oversold levels. And after such a movement, the basic trend in oil and gas is not great or is not highly bullish. So I won't expect a runaway rally. Some kind of an up move with the market is what I would expect. But at these levels in Reliance or an ONGC, I would wait for a declines to buy into in case I'm buying as a trader. And ONGC or Reliance, even at these levels, make good investment ideas at lower levels or a little lower levels, because I don't think Reliance will really break 680 levels. So not too much downside is what I would say, but I'm not that gung-ho in the short term.
Okay, so Reliance and ONGC was something that you're talking about buying on dips, but Sandeep, within HPCL that also gained close to 7% and it's currently trading at levels closer to 303, and in Oil India as well at 515 rupees. What would you do? Would it be a buy on dips for these names as well?
Not really. I mean, HPCL and BPCL and Oil India, they have different reasons of moving. Though the pattern does look bullish, the breakouts at times do fail. So this stocks, specifically the OMCs, I would like to buy on declines, and I would talk of a 10-12% decline. Not that it will come. If the market is bullish, that decline may not come, or that correction may not come. But whenever it comes for whatever reasons, I think those are the stocks one should accumulate and take a 3 to 6 month view rather than take a trading view of a month or two.
Right, Sandeep, what stocks would you recommend from the banking sector?
Bank Nifty is one which is looking strong. I mean, if one is already on the Bank Nifty, I already mentioned the view of 10,400, 10,450. And specifically, if you talk of a stock which you want me to recommend, we are recommending a J&K Bank, which has given a very clear and a decisive breakout in the weekly charts. And I see much higher levels, at least a 10-12% upside over the next few weeks.
Okay, so that's a very smart upside that you're expecting, Sandeep. But, talking about some other news trigger-based stocks, Patni Computers, we had the delisting offer for that one close on Friday with the counter trading at levels close to 495. Most of the bids, though, have come in at levels of 520. So given, that it's trading above the 50 and the, the 100-day moving average at this point in time, do you think that this sort of indicative level that has come through of 520 could probably drive the stock higher by another 10% or more?
Well, I would talk of a limited upside up to 515, 520, because if you look at the weekly charts, a 520, 525 level has been a very, very strong resistance in the past. And on many occasions over the past few months, this stock has fallen from those levels. So I would rather wait for it to cross 530, 540 on a closing basis, specifically weekly closing. Then we can talk of 600 target. But as of now, I would talk of booking profits around 520, 525, which is a very strong resistance.
Sandeep, even the auto sales numbers for the month of March are out already. So are there any counters that one needs to keep an eye out for?
Tata Motors is one stock which we have always been bullish on, but over the last 2 or 3 weeks, it has gone into a consolidation phase. 290, 300 is a very strong resistance it has run into. Having said that, I don't see it break 250. So if somebody has a little longer term, a couple of months is what I'm talking of, or maybe 3 to 6 months, one can buy into a Tata Motors. Not necessarily today, tomorrow, but at lower levels in the range of 260, 250. I don't see that 240 can be a good stop loss, and I would talk of a target much beyond 300.
Okay. Sandeep, also would like to get in a word on some of these concept names, like the likes of Jubilant Foodworks. We had on Friday this counter hitting, a fresh all-time high as well. Jain Irrigation also is another name that gained close to 9%. What does one do with these names at this point in time? Do you think there's still some headroom and, buying upside left in a Jubilant Foodworks?
I would say there is a trading upside left. I don't want to buy into a Jubilant Foodworks with a view that it will give me a 40-50% upside from current levels. Investors or position traders may be disappointed, but at a level of 1130, 1140 or maybe 1170, the close, whatever it is, if you talk of a up move of 5%, 7% where F&O traders can trade into, that very much looks likely.
Right, and Sandeep, an F&O strategy that our viewers can adopt for today's session?
We are liking Dr. Reddy's, which has given a breakout. So one can buy Dr. Reddy's April future somewhere in the range of 1760 to 1740. Take a little longer view, take a view of 2 to 3 weeks. Keep a stop loss of 1715 and play for a target of 1830 to 1850.